We provide open API technology, typically in a SaaS model for banks and financial institutions around the world. It enables them to expose APIs, create more secure, more feature-rich interfaces.
Open banking has transformed how financial institutions collaborate.
Screen scraping and credentials, that's obviously not a very good model. We take away all that complexity, making sure they are who they say they are. It's a more secure way of making payments.
Hi everybody, welcome to another episode of the Curiosity Podcast. Today we're joined by Chris Michael, a true innovator in open banking and fintech. As the co-founder and co-CEO of Ozone API, Chris is the front of enabling seamless collaboration between banks, fintech, and regulators through open APIs. He played a pivotal role in creating the UK open banking standard, shaping the framework that has transformed how financial services operate. With his background in agile methodologies, scalable tech, and user-centered design, Chris has been instrumental in making fintech more accessible and innovative for businesses and consumers alike. Chris, we're so excited to have you here. To kick things off, can you tell us a bit about Ozone API and the mission behind your work?
Sure. Thanks, Alex. Great to be on this podcast today. So Ozone, we do two things really. Our core business is we provide open API technology, typically in a SaaS model for banks and financial institutions around the world. And this helps these banks and financial institutions meet both regulatory and commercial requirements when it comes to open banking and open finance. It enables them to expose APIs that are aligned to whatever standard exists in that market, and also to help them turn that API channel into a commercial channel to create better, more secure, more feature-rich interfaces with fintechs, and therefore to enable better fintech services for their customers. That's our core business. But because our DNA, as you mentioned, my role was previously was helping build the open banking standards and framework in the UK. The other aspect to our business is we help regulators and other standards bodies around the world to develop standards and frameworks for open banking and open finance. We also increasingly now provide central technology for regulators and central banks to help that particular market roll out open banking and open finance at scale, to do so more quickly at a lower cost, and to therefore speed up the implementation of open banking and open finance in a number of markets around the world.
Yeah, thank you. That's impressive. And I think in general, open banking has transformed how financial institutions collaborate with third parties. At least that's the case in Europe. We're a bit behind in the US with that technology. But from your experience, what are the biggest challenges banks face when they adopt this technology, open API? And how do you guys at Ozone API help them to overcome this challenges?
Sure. So I suppose it depends on your definition of open banking. I mean, you could argue that open banking has been around in the US for 20 odd years because you've had fintechs connecting to banks to provide financial services, wealth management, accounting services, lending, decision making. That's been around in the US for 20 plus years, and in several other markets around the world. But typically that has been through a combination of screen scraping and credential sharing, where customers have been asked by a fintech to give the fintech their username and password, and the fintech has impersonated the bank to access and screen scrape their accounts. Now, what we've seen starting really, I mean, it's been happening all over the world, is that that's obviously not a very good model for a number of reasons. Sharing usernames and passwords is never really a good idea. And if you share your username and password, even if it's not screen scraping, even if a fintech is using an API to access your account, then they've still got pretty much unrestricted access to your account. And so what we developed in the UK back in 2016, 2017 was a standard which set a bit of a higher bar, if you like, but it predominantly focused on a number of things. It focused firstly on security, making sure that if a fintech is accessing the bank, the fintech is who they say they are and has got the right permissions or roles to be able to access the bank's APIs. Secondly, around consent management, to make sure that the fintech can only access the data or the services that the customer has explicitly given consent to. So, for example, if a customer says to a fintech, "I just want to have, I want to give you access, just a one-time access, just for 3 months worth of data, just from this one account," then that's all the fintech should be able to access. Now, those kind of concepts or principles were fundamental to the development of the open banking standard in the UK, and we created this standard, which was also aligned to two regulations. There was the Competition and Markets Authority, CMA order in the UK, and then there was PSD2, the Second Payment Service Directive in Europe, which also applied to the UK. So there's a regulatory requirement for the banks to actually implement this standard. And what that's meant is that, and the challenge for banks then is that not only did they have to build an API, well, many banks have been building APIs for years, but they all had to do it in a very specific way. It created, as I said earlier, a high bar around security and consent management. So all of the banks had to do the same thing, which was quite challenging and complex for many of them. It required very specific technology to do that. And they all had to do it on a fairly tight timeline. You know, there's a regulatory timeline when they all had to be compliant with these APIs and these standards. And that's the nub of the challenge that banks have got around the world, is that when a standard comes out or when there's a regulatory deadline, all of the banks have to do pretty much the same thing, which is quite specific and is a specific type of API. And they have to do it to typically a very tight time frame. And so that's the kind of problem that we solve, or we look to solve in different markets, is that we provide this technology which enables banks pretty much out of the box to comply with that regulation and that standard. And effectively, we do all the bits that each bank would have to do, where they're all having to do the same thing. So rather than each bank having to do exactly the same thing, we take away all that complexity from them around identifying third parties, making sure they are who they say they are. We integrate with various directories and trust frameworks in different markets, various certificate authorities. We make sure that the third party can only access the API, the data via these APIs with the customer's explicit consent. So we deal with all the consent management aspect, and we deal with all of the API reporting as well. Typically, banks then have to report on things like availability, performance, usage. They have to report not only internally, but also to regulators. So all of that complex stuff that every bank has to do, we do that once, and we provide it as a SaaS model. So all of the banks around the world in these different markets, they can sort of comply, if you like, pretty much out of the box.
Right. I have so many questions. I think one of the main questions I have. So, based on your experience, and you've been, at the forefront of this technology for a long time, what are the most common use cases that you've seen that fintech companies are using open banking?
Sure. So, I mean, it's important to note that these use cases apply. There are use cases for retail customers. There are use cases for small businesses. There are corporate use cases for large corporations. Mm-hmm. And it depends on whether the fintech is targeting one or more of those three core customer segments. But in retail, we've seen the kind of base use case was just basic account aggregation. So providing, for example, a personal finance manager, which gives you as a customer a view across all of your different accounts. Mm-hmm. Now, that's useful if it's across your bank accounts. And that was one of the limitations of the regulations, if you like, in the UK and Europe, is that they were limited to what's called online payment accounts. But it gets incrementally more useful, or exponentially more useful rather, if you extend those accounts to cover any type of financial product, whether it be credit cards, lending accounts, savings accounts, investments, pensions, because then you can genuinely give a customer a full view of their financial products across multiple providers, across multiple different product types, and that's really useful and really powerful. And what we're talking about there is effectively extending from open banking into open finance, because it
Right.
covers not just bank accounts but all financial products. But financial, the kind of base use case was personal finance management. And for businesses, it was business financial management. So, but typically that is integrating with a cloud accounting package, so that business customers can seamlessly integrate their accounting package with their bank account to do real-time reconciliation, etc. Now, that offers utility and value for customers. But what we've seen in the kind of the next iteration of that, if you like, was lending decision making. So helping lenders, could be banks, could be alternative lenders, use open banking to not typically not to replace traditional credit scoring, but to supplement it. So to provide real time proof of income in a way that can't be faked. Sending PDFs
Right. Right.
or
Yeah.
exports of spreadsheets is not a particularly great way for someone to prove their income. Whereas integrating with your bank account via open banking can give you sort of real time proof of income and expenditure as well. And so we've seen this, and this is a really good use case because it applies equally to individual customers as well as to businesses. And what we're seeing in a number of markets is that this really helps people get lending. It helps customers get loans where otherwise they might not be able to get loans. It helps decisions are made more quickly for lenders. This is transformational because it significantly reduces their cost and risk of providing that credit facility. We've seen a number of iterations of that where it's kind of not just a one-off connection to your bank account to do a one-off validation to issue a line of credit, but actually it's an ongoing connection to help the lender adapt their lending product over time to the customer's needs. So that could be if the customer doesn't need to draw down all of their facility, then that can be staged in a number of ways, which reduces the cost to the customer and reduces the risk to the lender. Or if the customer needs more money over time, then again that can provide that sort of capability as well. So lending is really important, and it's really important for whole economies if you're trying to give people better access to credit, whether they're individuals or small businesses. And we're seeing this as being a big driver in many markets now for regulators who want to stimulate growth, particularly small businesses, to give them better access to credit. And open banking is a really powerful enabler of that. And critically, it's also something that actually is really good for the banks as well, because as I said, it reduces their cost and risk as well. So it's a use case that banks are very interested in. We've also seen an extension of that is when you start to combine that with, and I think we'll probably touch on this in a bit, but when you talk about how you can use AI, but typically if you can provide personal finance management or business finance management platforms which look at a customer's data, not just their banking data,
Mm-hmm.
all sorts of other data, it can start to recommend better financial products to them. It could suggest that they turn overdraft into loans, or short-term loans into longer-term loans. Or it can help people get a better credit card, which is more suitable for their needs. If they travel a lot, for example, there might be a better credit card which offers better rates if they're traveling. So those are kind of some of the base use cases. And then what we've also seen is open banking isn't just about getting data. It's about also initiating a service. The most obvious service to initiate is a payment. So we've seen lots of markets really focused on how open banking can help speed up and make payments more secure. And typically this is an overlay on top of a credit transfer. So in the UK, for example, this has been used to, it's become now, I think, the predominant method by which people pay their tax. They pay it via open banking. What that means from a customer experience point of view is that the customer doesn't have to. They just go to the HMRC's website,
Mm-hmm.
choose to pay by open banking. The customer doesn't have to type anything in. They don't have to type the amount of the tax they're paying because it comes automatically from the government's website. They don't have to type the banking, the account name, the sort code, the account number, the IBAN, if you like. They don't have to type any of that in. It's all completely automated. The reference number, typically tax reference numbers are sort of 12 digits or 16 digits. The customer doesn't have to type that. All of that is automated, and the customer uses their face, their thumbprint, biometrics. There might be another, step-up authentication as well, depending on the amount of the payment. But the customer just goes to the tax website, says they want to pay by open banking, selects their bank. Everything then is automated, and what that does, it makes it much easier for customers to pay their tax bill. For HMRC in the UK, it significantly reduces the amount of mistyping of reference numbers or paying the wrong
Yep.
amount.
Yeah.
So
Yeah. It happened to me.
it's a much better outcome for everyone, and
Right.
it's more secure as well, because what you've got is, in this instance in the UK, HMRC were using. They didn't act as a fintech themselves. They used a third-party fintech, a company called EcoSpend,
Mm-hmm.
who were a small fintech who, at the time, they created this functionality. They were regulated by the FCA in the UK as a regulated payments initiation service provider. So you've got a regulated party acting on behalf of the HMRC, integrating directly to your bank account. So you've got two regulated parties in the chain of things, and taking away any opportunity for customers to type the wrong thing in or be scammed by someone pretending to be HMRC, telling them to pay this money into a bank account. So it's a more secure way of making payments. And what we're starting to see now, the next iteration of payments initiation, is something that's called variable recurring payments, where rather than just making a one-off payment, you can set up a standing consent or a long-lived consent for payments within certain parameters. So this could be used, for example, to pay your Uber bill or your phone bill, or anything where you might normally link a credit card or give a direct debit. And it's a much more flexible and much more transparent and much more secure method of making ongoing payments as well.
Chris, I'm being cautious of time, and it's going to be a short episode. I'm so excited about this technology, and while you were covering cases, I couldn't resist of thinking about all the similar problems we've been solving in the US, but in old school way. Do you have any exposure? Have you seen any ideas of implementing similar technologies in the US?
Yes, so I mean, open banking is well, the regulations were finalized a couple of months ago for open banking and open finance in the US. So it is the use cases are already there. There's already an active market of banks providing banking
Right.
services. Some of whom are providing APIs, some of whom are still allowing screen scraping.
Yeah.
And there's an active market of fintechs and aggregators or data access platforms who are providing the core connectivity to enable these services. What's changing is that the requirement is now to kind of remove screen scraping completely, to introduce these APIs to a common standard. The standard there is called FTX, the Financial Data Exchange Standard. And so this is, and the timelines have been announced. It's a sort of staged timeline over the next few years. So we're going to start to see a more regulatory-driven, standards-based approach in the US, which can only be a good thing for customers, and ultimately only be a good thing for fintechs and financial service industry in general. So yeah, it's coming to the US, and we're going to very much be a part of that journey there too as well.
Yeah, that's what I was about to ask. Any plans for Ozone API to be there? But
Yeah, I mean,
you already answered.
we operate pretty much all over the world. We are, I think, probably the leading platform globally that supports all of the different standards around the world, including FTX in the United States and Canada.
Awesome. Good luck with that.
Thank you.
Chris, I'd like to thank you very much for being part of this episode. It's been really insightful for the audience. I hope you enjoyed the episode, and see you next time.
Fantastic. Look forward to seeing it. Thank you very much. Great to meet you as well. Thank you. Thanks.